Peter Mcguire joining us, CEO of XM Australia. Peter, hi, great to have you on. And, welcome as always to NDTV Profit. Let's start by getting your take on the kind of upside we saw in Friday's trade. Do you see that sustaining? Is the PCE data that came in, the inflation data that came in, enough to really push down fears that came after Jerome Powell's statements?
Well, good morning, Tamanna. Merry Christmas to everyone. And I think it's quite convincing when you look at Friday's numbers. Over 1% for the Dow, the Nasdaq, and the S&P. I thought that was very, very strong, which in turn created, in a lot of ways, momentum to the upside. And that's really that positive tone has washed across Asia today. Strong numbers. There's, in the green, Australia's well up, and pretty much all of Asia. And when you guys, I'm expecting in the green as well. So there's that tone to deal with. As far as PCE, yes, that was better than expected, and we're looking now at probably 2 rate cuts for 25 versus rolling your mind back a couple of months. It would have been 4 for the Fed. So that's the storyline. King dollars reign supreme, and it's been a marvelous year for FX traders.
It has been, and I think King dollar has just pooped the balloon of Bitcoin as well, Peter. So the question really is, if this soft inflation reading, if you will, is momentary gains in nature, does it still mean that the non-dollar or the anti-dollar asset classes continue to remain under a cloud from a near-term trade or tactical investing strategy, Peter?
I think so, Niraj. Good to see you. I feel as though that's got to be the work through until at least January 20, and then President Trump's in. So we've got less than a month until blast off. And we know that he's going to be very unorthodox and I think far more aggressive than his first term. So what pressure does that cause to the likes of commodities? You're looking at gold, silver, and of course the energy sector, which is a good sign in a lot of ways as far as cheaper energy. And what that does as far as push up, we're being crushed from a US versus Aussie at the moment at 62 and a bit. The yen's at around that 157 handle. Pound's really soft, and so is euro. So Niraj, there's every chance you could see parity against euro dollar, and it hasn't got far to go. It's around that 104 handle. So I feel that over the next couple of weeks, if you don't see a derailment, then I feel as though King dollar will continue its upward trend.
Peter, I'm just trying to understand what the view becomes now on emerging markets like India. Rough patch ever since October, I would say, in the Indian markets. October, November, and all of December has been fairly tough. We'll see what the last 4 or 5 days do. But in January, when you have FII allocations being reset, so to speak, do you see a better bump up for India?
I do. I feel as though, Tamanna, look, the storyline doesn't change. The dramatic growth that the country's experienced over the last couple of decades, it blew off some hot air, but the overall trend, I'm sure, is going to continue aggressively to the upside, and it's going to be an attraction. You hear the likes of Mark Mobius, people that travel to India often, and I'm one of those travellers. It's just astounding, from an infrastructure spend, from growth, from building, from you name it. It's performing incredibly well, and I think your best days are ahead of you. I don't say that lightly. A very strong entrepreneurial energy that rolls across all of India, and I feel very solid that the second half of this decade is certainly going to be very much India focused.
Peter, one final question, and I hope you're taking a good holiday around Christmas. But one final question: you track crude better than most people that I know. The general belief seems to be that the overall pricing trend for crude could be sub $70 as an average for 2025. Do you reckon that's a fair assumption?
I do in a lot of ways, Niraj, and a couple of things. First off, the only thing that's going to blow it to the other side would be dramatic geopolitical tensions. And I don't think whether that's going to happen, considering President Trump wants peace in the world. That's been his mantra. And of course, to increase production around about 3 million barrels of crude coming out of the States, there'll be a 25 million, and that's for a 3-year window. So 3 million in 25, 3 in 26, and 3 in 27 builds it to over 30 million barrels a day of production. And I think you're going to see very much softer crude energy prices across the fabric of the world unless you see something dramatic happen from a geopolitical standpoint. So yeah, I think it's going to be the inflation. They're going to get it very much under control with cheaper energy.
Okay. Well, Peter, Merry Christmas to you and everybody around. Have a great festive time, and thanks for joining in today.